Hello, everybody. It's great to be with you today. 5 years ago, about 7 tube stops away from here, I received a wonderful honor as chairman of the CFTC, and that was the Freedom of the City of London. It's a very ancient tradition, believed to be first bestowed in the year 1237. And the purpose of the honor, it arises from the medieval practice of granting worthy citizens freedom from serfdom through the liberty to conduct trade in the City of London. Fittingly, because of that honor, I'm now entitled to actually herd my sheep across London Bridge, as if I had any, right? And there are other privileges that come with it, including the right to request a silk wrapping around a noose if I've ever hung on the gallows. So that's one privilege I'm hoping never to have to call upon. But more seriously, I'm conscious that I'm speaking to you today about economic liberty here in England, one of the crucibles of the Enlightenment, which was the intellectual movement that sought to improve society through fact-based reason and inquiry. And the Enlightenment reshaped the way people understand issues such as liberty, equality, individual rights, and especially economic freedom, the freedom to transact as one sees fit through their own choices. And the Enlightenment recognized that individual freedom is inexorably tied to economic liberty. Well, where are we centuries later? Well, we're well into a new and profound series of global societal changes. We're headlong into an information-based and a digital networked world. In short, the internet is doing to finance and to banking and ultimately money itself what it's already done to information gathering, think Wikipedia, to retail shopping, Amazon, to entertainment, YouTube, to social networking, Facebook, etc., photography, and so on and so forth. And what is that? Well, it's increasing speed, it's increasing efficiency, it's increasing automation, it's lowering costs, furthering inclusion, unlocking new business models, disrupting a whole series of traditional intermediaries, and challenging traditional market structures. But importantly, it's also raising the question of whether this new internet of value will truly enhance our economic liberty and financial freedom as we all hope it will. Or will it rob us of liberty in a similar way to how the second-generation internet centralized information and speech in the hands of a few big tech giants? So what I'd like to do in the next 15 minutes is issue to all of you a challenge and indeed a call to action. And that is to take steps to make sure that the future of digital finance is one that is indeed worthy of free and open societies and true to the Enlightenment values of human liberty and financial freedom, and is not a return to some form of digital serfdom. And to do this, we must first accept the reality that modern money is changing and changing rapidly. It's expanding from fungible cash bills and electronic notations on the balance sheets of central governments and commercial banks. It's changing to unique digital notations on new digital infrastructure operated by global decentralized collectives, national sovereign governments, and private sector entities. The Atlantic Council is just out with new information on the global adoption of various forms of central bank digital currencies, or CBDCs. And the new headline number is that 134 countries and currency unions, representing 98% of the world's GDP, are now exploring CBDCs. 4 years ago, that number was only 35. In fact, 68 countries are now in an advanced phase of exploration, development, pilot, and even launch. And that includes 19 of the G20, with China placing its digital yuan, what it calls its ECNY, in over 260 million digital wallets. And by the way, that's a 3-year-old figure. And the EU is planning to roll out its digital euro by 2025. That's CBDCs. At the same time, global stablecoin usage continues to increase dramatically. Stablecoins settled over 11 trillion on-chain transactions in 2022. We don't have 2023 figures yet, only surpassing the payment volume of Visa and reaching 14% of the volume settled by ACH. And the supply of stablecoins has grown from less than 3 billion 5 years ago to over 138 billion as of January 2023. And of course, that's CBDCs and stablecoins. Decentralized cryptocurrency like Bitcoin and Ethereum continue to grow in notional value, computing power, and distributed ownership. Bitcoin has now surpassed the Swiss franc to become the world's 13th largest currency. So here's the point. Whether or not one country deploys central bank digital currencies, all of us are going to be dealing with CBDCs, stablecoins, and crypto in the century to come. That sometimes fashionable debate that rages, especially in Washington, between CBDCs, stablecoins, and crypto is a false choice. The future is all of the above. 4 years ago, at the World Economic Forum in Davos, we announced the launch of something called the Digital Dollar Project. The project operates a neutral, nonprofit forum to consider how best to modernize the US dollar, preserve its reserve currency status, and the values that the dollar has historically stood for, values of free enterprise, free commerce, free trade, and economic liberty, in this coming world that I just described of both decentralized and centralized digital currency networks. The Digital Dollar Project provides a safe space, if you will, where thoughtful consideration can take place away from the polarization of contemporary politics and social media. Over the past 4 years, the project's engagement with both the public and the private sectors has delved into critical topics of CBDC privacy, risk, security, cross-border payments, and interoperability. From hosting privacy roundtables at leading educational institutions to releasing a first in a series of risk and privacy working papers, the Digital Dollar Project has been engaged in helping define the Bill of Rights for CBDC privacy in a digital age and understanding the implications and the next steps for thinking of the future of money. And the project published the first ever U.S. wholesale CBDC pilot study, working with the DTCC, and the first ever U.S. retail CBDC pilot study with Western Union and BDO Union Bank. To be clear, the Digital Dollar Project does not call for deployment of a U.S. CBDC, and it is very supportive of stablecoin development. But the project asserts that the U.S. should only consider issuing a CBDC once key design elements of privacy, security, distribution, and economic stability are properly understood and democratically addressed. But the project does encourage the U.S. to assert principled leadership in CBDC experimentation at home and digital currency standard setting abroad that is consistent with Enlightenment notions of civic norms and values. I'm here to report to you that the one thing we've learned in our work at the Digital Dollar Project is that digital currency networks, both sovereign and non-sovereign, and centralized and decentralized, are coming very fast. And the time for global standards, dare I say Enlightenment democratic standards, is now. And the backdrop to the quickening advance of digital currency networks is the increasingly multipolar, complex, and fragmented world that we live in, one riven by war, global conflict, and political and social division. The latter 20th century financial system, dominated by multinational banks and the US dollar and Pax Americana, is sadly but gradually yielding to a 21st century worldwide kaleidoscope of overlapping and partially interoperable digital networks of value. Some are decentralized like Bitcoin. Others will be variously centralized and operated by global banks and big tech companies. And others will be deployed by national governments and even exported for sale as white label CBDCs in a box to the developing world. And here's the danger in all of that. Those centralized digital currencies that emerge, both sovereign and non-sovereign, CBDCs and stablecoins, will be gathering points for massive amounts of data about the economic and financial activities of users, citizens, and indeed voters. And many thoughtful people across the political spectrum, here in the UK, in the EU, the United States, and Japan, and across the globe, are appropriately concerned about misuse of such honeypots of private financial information. They're concerned about direct access by central governments, global banks, and big tech to these troves of financial data. And they anticipate political and commercial pressure on private sector actors to conduct surveillance, gather information, report on activity, and even to disable financial transactions with disfavored groups and activities in a very similar fashion to what we're now seeing about the deplorable censorship of speech on social media by both government and big tech, and the two of them often working together. Just yesterday, the U.S. Supreme Court heard arguments on whether the U.S. federal government can coerce social media platforms to censor speech it doesn't like. And unsurprisingly, the government argued that it may rightly coerce censorship of internet speech. And that's why, regardless of the form of digital currency, sovereign or non-sovereign, stablecoins or CBDC, it is imperative that free society thoughtfully consider privacy implications and insist that the emergence of digital networks of value be consistent with key democratic laws, norms, and civil rights. Designed right, a digital dollar, or indeed a digital euro or a digital pound, or any digital currency system, a CBDC or a stablecoin, should run on systems that are operationally and objectively transparent, providing the public with independent assurance about technical function, security, and resistance to impermissible monitoring, data mining, and other exploitation. Citizens should not have to rely on a government or a stablecoin operator to say, "Trust us, we're not invading your privacy, and we're not influencing your economic choices." Digital currency users should be able to see for themselves that they're not being surveilled and manipulated. In fact, individual economic privacy and censorship resistance should be affirmative design choices and features, and indeed competitive advantages of digital systems of value worthy of free societies and open economies. By encoding individual economic privacy into its very architecture, CBDCs and stablecoins should serve as desired instruments for people the world over who aspire to financial autonomy and inclusion consistent with basic human rights and civil values. And as an American, I feel anything less in anything that is based on the dollar, references the dollar, stabilizes the dollar, or is the dollar, is a betrayal of the American Constitution. So as I start to close, I want to reference a terrific new book just published by Frank McCourt, the founder of Project Liberty, and my good friend, the digital journalist Michael Casey. It's called Our Biggest Fight: Reclaiming Liberty, Humanity, and Dignity in the Digital Age. In this great book, they explain how in the second generation phase of the internet, information has become centralized and controlled by big tech. In this Web 2 world, we've lost control over our lives, in what McCourt calls digital feudalism. Quote, "It's as if we're marching back toward the Middle Ages. Our sense of agency has been seized from us by a clutch of corporate behemoths. By scraping and stealing our data, hiding the influence of their proprietary algorithms, and persistently surveilling our online activity, they have stripped us of our agency, stripped us of our capacity to set the course of our lives." Well, McCourt and Casey have it exactly right about the state of Web 2. But what about Web 3 and the coming Internet of Value? What are we going to do to make sure the same thing doesn't happen? Will Web 3 live up to its promise if the big tech behemoths centralize the coming Internet of Value with control over our everyday economic choices, our economic liberty? In free market economies, what is liberty after all but how we make a living, how we invest for the future, and how we support the people, causes, and institutions we believe in? Are we willing to compromise those financial decisions to the priorities of big tech, big banks, and big government? 30 years ago, the first wave of the internet rolled across the globe. Then, the United States, England, and other leading democratic nations, the heirs to the Age of Enlightenment, made sure that the Internet of Information, the first wave of the internet, reflected the values of open and free societies rather than closed and repressive ones. Well, today, the free world and free people must do the same thing again. We've got to work together to make sure that the coming Internet of Value reflects similar values of financial freedom and economic liberty. Together, we must drive global standards for digital value networks that are suitable for human worth and dignity. So here it is, folks. Here's my plea to you this afternoon. We must and we have to work together as our enlightened predecessors did 30 years ago to ensure that the future of digital currency networks is one that enhances the free world. Let's set standards for digital currencies, both sovereign and non-sovereign, and not fall into the trap that one is inherently more free than the other, because it's not. We must set standards that are worthy of human liberty and free people everywhere who aspire to liberty. So let's get to the task at hand. Let's not be intimidated by this innovation, but seize it to enhance the dignity of our fellow men and women. And let's shape it in accordance with our finest and truest Enlightenment ideals. Thank you all very much.